It is Monday, it's a new week, it's week 46. You are listening to the StockInvest.us podcast. My name is Jim. And in last week's podcast I told you that I think Meta will do perfectly well during the week. And it did, because Meta was up more than 20% last week. But it was not only Meta, because Nasdaq was up more than 8%. And it was the Thursday, exactly as predicted, that would change the game. Will this week be as good as last week? Well, it's hard to say, but I will try to do my best. Because as usual, we will do the thing, look at the market, what can we expect for the week ahead of us, what are the major things, and then head for the trading section. Last week I changed a small thing in the podcast, and this week I will do the same thing as well. I will move the disclaimer to the end of the podcast. But you will find the disclaimer in the description, and as I said, in the end of the podcast. And please pay attention to the disclaimer. But let us not waste any more time. Let's go straight to the week ahead of us. As you might notice, the disclaimer was not first, it has been moved to the end of the podcast. The reason for this is very simple, because we see from statistics that a lot of people are leaving as description and disclaimer is being read. And that brings me to the very first tip of the day. I've spoken of this before. You have to have patience. I believe these people who just leave during a disclaimer, they are neither good traders. The reason for this is you have to have patience when trading. You have to do your due diligence. I don't say that you should listen to disclaimers or descriptions, but in general you have to have a strategy, you have to be patient. You also have to take in information that you do not like or consider relevant, because it might actually be relevant. So that patient thing still remains one very strong tip. Be patient, do your due diligence, do not buy stock on random impulse. Even at the end of this podcast you will hear me give some trading tips. I don't think you should just buy them before doing a full due diligence yourself. Check if other means the same thing I say. Check if or what is written in the news. Make up your own mind. Make up a qualified decision. Why would you buy what you would buy or sell? Now, last week ended up being extremely good. Nasdaq up 8.10%, up to 11,323 points. Dow Jones did very well as well, up 4.15%, ending the week at 33,748 points. It was the Thursday, just as predicted, that changed the picture. It was the inflation numbers coming in lower than expected, and everyone think that inflation now is under control and that the Fed will not have to raise the interest rates in the pace that they have done. And that of course put more pressure towards gold, because as I told you, as interest rates go up, gold should go down. And the strong dollar will also hold the dollar down. But as the inflation number came in and the expectations for future interest rates hikes get lower, we saw a huge increase in gold price and also the 10-year treasury yield going down, etc. And gold made a huge jump. I will get back to that a little later. This week there is nothing special happening as such. We had two very exciting weeks with huge numbers coming in. This week there is nothing really special. The news will of course be about FTX and the crypto crash and these things, but in general there are, as I said, nothing majorly on. The only number, there will be some production numbers that you can follow, of course, during the beginning of the week, and on Thursday there will be the usual job numbers, and I think these numbers will surprise a bit. Like I said last week, I expect inflation actually to go down, but it's just temporary. It's just due to seasonal moves. And I think inflation will be super strong. Just give it a month or two and you will see what I mean. The Thursday comes the job number, and as I said for a very long time, we are heading for a recession and stagflation. And I've been waiting for the unemployment rates to go up, and I think that will happen on Thursday. I think that will be a first sign that you will see that will take the market a little bit by surprise. On Thursday they will come in worse than you think. The reason is very simple. I spoke a lot about it. What happens, there is freezing in hiring, and as you have seen, the IT sector has really been laying off people like Twitter, Meta, etc. recently laid off a lot of people, and this is happening everywhere. And you have to understand there is a ripple effect. When such a big company lay off people, it will ripple down to all their sub-suppliers and etc. etc. So I think Thursday you can pay attention. The job numbers, I think they will come in higher than expected, take the market by a little surprise, but I'm not sure if it will move the market. So we're heading for a quiet week, and sometimes quiet week is totally okay. Oil, I said I think oil will go up. It's been flirting around $80 to $100 for months now, and last week it fell by $3, currently trading around $89. But I think, as I said before, I think oil will just continue up, and the reason why I mention oil is because, as I said, for more than a year, it has to be close to 2 years I guess now, oil shares may be exactly where you want to be, and last week's trading tip Chevron just continued to do well. And anyone that's been following oil tip trading have been doing super good. These companies didn't have the strongest growth during the week. It was especially for IT companies, but they are making a lot of money, paying hefty dividends, and as I said, they are somewhat secure in a volatile market. So the oil tip still remains. I think oil will continue upwards. I think it will break 100, and I think at the peak it will hit 200. The question is when. I think it will be as winter now is progressing everywhere, and energy prices again will be pushed to the limit. Gold moving up $108 or more than 6% last week was very nice for me because I'm invested into gold, and as I told you, I think gold will do very well, going all the way up to 2,500 high. Currently sitting at $1,768 is still far up. The question is, how can you utilize this in your trading portfolio? Should you get back to gold stocks? I think gold stocks may hold well. They had some beating, and I think that as we progress during the next, let's say, 3 to 6 months, I think gold stocks may do okay. Not as good as oil. They will not hold as good as oil, but I think they can do somewhat okay. And this is a little hedging if market starts to fall. And in general, I think that oil and gold could hedge a little bit when things get rougher again. 10-year treasury yield falling last week was no big surprise, as Nasdaq went up 8%. 10-year treasury yield went down 8%, currently at 381. But again, I think it's just a matter of time that it will be up above 4. Fed will reveal some of their thoughts if they will try to ease the market, and just keep that in mind. If they for some reason say that we will remain on the course that we currently are, that can cause market to fall hard. So keep an eye on that, as it's said. These were some of the fundamentals. As usual, we have the Ukraine war in the background, but it's currently silent. And as I said, the huge conflict around Taiwan will come up in 2023. We see other bad things happening around the world that also will come to play later. But as I said, the stock market may turn much earlier than the rest of the world, and we are keeping above the 10,300 level. This week there will be some earnings. Some of them you really want to pay attention to because they are interesting. It is Walmart, for instance. The thing about Walmart and other in that type of consumption businesses is that they usually do okay, even when inflation is high, because they just put the cost on the consumer. We have to have groceries, etc. So their numbers will be very, very interesting, and something you could keep an eye on. You have Advanced Auto Parts, Walmart and Home Depot today. And Tencent Music, it's an interesting case. Tencent Music, I think it's totally undervalued, has huge potential, but still maybe too early. Hard to say, but the numbers will still be interesting. On Wednesday, you will have, sorry, I said today for Home Depot, Walmart, Advanced and Tencent. It's tomorrow, my bad. Today there will just be some snack food, the quarterly group, Tower Semiconductor, etc. Wednesday there will be Cisco and Nvidia. Nvidia is especially interesting for those who are into these semiconductors and gaming stuff. So it'll be interesting to see how Nvidia do, because that will cause some different effects onto other stocks. Thursday, you have Alibaba Group, another volatile stock with some potential, and you will have more food with Doyle. And on Friday, you will have G-Day. So there are some companies, but these are the very last for this quarter season. So we have a week, not much fundamental news, coming to an end of the quarter season. We are getting into a quiet period, and it may not be the worst thing. We will slowly get to the chart, show you the chart before getting to the trading tips, and you will hear what I think could be good candidates for the week ahead of us. Zomedica finally moving, very interesting, very nice. I hope this will be the week that Zomedica, for instance, will really hit the fuel and the rocket engine and fire up. We will see if it will be the case. MULN was also moving. Very, very uncertain what happens to this week, and I'll let you know if the trade was still open or if it's closed. You just have to listen a little bit more. But let's finish the argument about the week ahead of us. As I say, it's a quiet week, and these things, we will have a look at the chart. These things are interesting by themselves, because we know major things can move the market. I like to do two things. I like to look at the fundamental news, what are the main things moving, and what are the technical pictures saying. The fundamental plays a very huge part of the long-term things. As I told you, get into oil shares when oil was 20, because that long picture said that oil would just go up, and it's been such a good trade. Same thing with gold. And all the big lines have so far held up, and we've been able to put our trades, because if you think like I do that oil will hold good even if markets suddenly go down, let's say Fed will talk very hawkish, markets go down, oil stocks will hold up somewhat good, and your portfolio will be a little bit more secure. As I said some weeks ago, the markets were very, very low, and I increased the amount of shares which I have in this trading portfolio that I give you every Monday, because I thought the risk reward was good. So this is how we play the game. But let's look at the the technical picture for the week ahead of us. What are they saying? And one of the things that I like to talk about is signals. We see they become more and more popular on our webpage, StockInvest.us. The amount of buy and sell signals. You can refer to this as HOS indexes. It's just showing how the situation is. And across all the tickers that we analyze, more than 38,000 tickers, but 26,000 of them are qualified for these signals. Right now, 37% are giving buy signals. This is very, very high. And this is the usual scenario where two things happen. It goes bad. The question is just when it goes bad, because one, it can go bad already this week, or we can get into a frantic market where the market just push hard. It can push hard 3 weeks ahead. I've seen this before, but it is at a place where things can change very, very rapidly, and you have to be more on the ball, because last week's super gains can be washed away in a pen stroke during a few hours of trading, and that's it. At the same time, with 37% buy signals, we are in something called overbought. The markets are very heated and things can go even faster. And Nasdaq falling from 16,000 all the way to 10,000, currently sitting at 11,300. There is such a huge way up to 16,000. That means that if we keep the momentum a little bit more, some of the IT stocks can just push imaginably fast upwards. You will see stocks go 30% so easy. And there is no guarantee that we haven't seen the bottom. It could very well be that the stock market did bottom when Nasdaq was 10,300. These things we do not know. That is why I say 10,300 is such a hard level. Bounced 3 times up from this level, not being able to break through. But if it breaks through, it will be really bad, and we will have Nasdaq to 8,000, as I said before. But currently it is hammering above. It's in general a nice thing, what we want to see. It's no guarantee, but it reduces the risk a little bit. But the overall general buy signals are extremely high. Going to Nasdaq, also 37%. And if we go to New York Stock Exchange, it's 47%. It's way too high. It's way too high. It's just a warning. This will not last. You can enjoy the minutes, because I promise you there will be pain for New York Stock Exchange very soon. London 36, Tokyo 34, and Shenzhen 37. All of this smells to me like it did many weeks ago. I don't remember exactly the week when I told you this will not end well, and we had very, very bad weeks following. But we'll look at the chart. Will it happen this week? Will this be where things starts to go back to red and we have a natural correction? Because we're just talking natural correction. Things get a little overheated, a little optimistic, then it falls back, and the main important thing is that it stays above support. And I just mentioned to you that the support is at 10,000, let's say 3, 4, 500 in this range. There is very good support from Nasdaq. And if you're listening to this podcast on YouTube, on audio, Spotify, or wherever you are, please note that it's also available on YouTube, and you can see the chart. I will do my best to explain what we see. So we see Nasdaq in a very downwards trend. That's the general picture, but showing a more horizontal move over, let's say, the last 1.5 months, moving between 10,300 and 11,300, currently in the top of this rectangle formation. And the question is if it has momentum to go up. There is one thing I like. The relative strength index is still only 56. It's not super overbought. It's somewhat okay side. And now you may think, so what are buy signals and what is a relative strength index? So buy signals, to take that first. At StockInvest.us, we have made some algorithms. It was made back in 2004-5 and been refined ever since, where we add lots and lots of different things, conditions, indicators, signals into our system. And based on this, we're able to rank the stock, to give it a score. And that score will give an idea what these algorithm things. So it gives it a buy, sell, or hold score between -10 and +10. Very, very seldom you see stocks upwards to 10. And usually if they get too high, it's also a sell signal. They usually flip otherwise. But that is buy signals. Relative strength index is just an indicator measuring how many days the stock is moving up compared to down during a certain period, in this case 14 days. And it's one of these indicators that are really low. It's super easy to learn at StockInvest.us. If you go to any ticker, you will see the relative strength index chart below. You can just check for yourself if the relative strength index is high. The stock usually go down, and it's such an easy indicator. So that's a very, very good tip. If you know absolutely nothing about technical analysis and like to learn one easy thing, relative strength index might be the one indicator that you like to have a look at, because it really works very well. Can be used in long periods, short periods, even intraday. There are several tools measuring relative strength index intraday. You can use it in very advanced ways, and maybe one day I will make a video explaining exactly how you use it, because if the trend is upwards, the relative strength index can remain high for a long time. And the opposite, if you are in a downwards trend, a low oversold relative strength index can remain oversold or low very long without the stock moving particularly much up. So we are in a situation, we are at the top of the trend. The volume is somewhat okay. What I really like is that now there is very much support below. It's a good thing. Buy signal short-term moving average, buy signal long-term moving average, and the most natural thing now is that relative strength index being okay, somewhat low, even have a pivot point at 45, showing that it should go a little bit more up before it goes down. So the downside seems to me to be somewhat controlled. Plenty of support below, and at the same time we had a very strong week last week, and that can be some natural days of down, Monday, Tuesday, just a few hours, I don't know, but there is, as I said, it will just be natural. For the week ahead of us, everything indicates that it will be volatile. The reason for this, as I said, Nasdaq moved very much last week. It is at the top of the trend. Usually it should take a turn down. At the same time, there is plenty of support below, meaning that they can just fall a little bit and then bounce very hard upwards. Everything indicates a volatile week, interesting week. I would say a positive ratio in general. You should be careful. Do not go into stocks that is way too overbought. As I just told you, the market is very high. The amount of buy signals is way too high. It will turn down, but at the same time it can go much more. I've seen this many times before. So one of the strategies you can do is you look, you think that okay, there will be more into the market, find stocks that are not topping out on the relative strength index, a little bit lower relative strength index, because that is what the market will try to find now. The stocks that didn't go crazy last week with potential to go up, you will see these second runners now follow. It's a very classic pattern. So I think some of these second-hand stocks can have a very good week, while some of the more major stocks will struggle a little, even maybe fall back. For the week as such, volatility, third week in a row where it's so hard to say will we end up or down, because it can really be both. The small thing can trigger huge falls, at the same time enough support, so there has to be very bad news. Let's say that I think the very low will be 10,700, it is still far down, and the very high will be 11,800. So I think we'll move somewhere in between there. By the end of the week, probably be somewhere close where we are today. That will be the end evaluation. And that brings us to the trading tips, the last few minutes, where I will tell you exactly what I think could be maybe good candidates to look into. What a great week I had last week. It's very seldom I see so much green, and I really hope you did too. I will very shortly reveal the tickers for the week, because this is the most interesting part of the podcast. It's where money are made and lost. But you have to understand that all the things I said earlier on the podcast boils down to this part. The picks are not random. They are based on exactly the things that I speak about in the market section, where I think things will go good. Certain sectors, you will see that I'll pick stocks from these sectors. If I think risk is high, I will reduce the risk a little bit, pick stocks with less risk, etc. And we've been doing this week out, week in, and banking green after green. The only time things really went bad actually happened 2 weeks, but week 37 I managed to have loss on all my tips. Other than that, it's usually just green after green. And the losses, they are reduced by stop loss. It's just how it works. And sometimes stop loss works very well, sometimes it rips you for a little profit. Happened last week, happened also, sorry, the week before, and also last week, because XBEV, I got in at XBEV at 792, and it went up and then fell down, was cut by stop loss at 815, giving 2.90% profit. Very happy about that. But XBEV went much more up than that. So if you still are in XBEV, it had an amazing day on Friday, up 20%, but it was much volatility during the week, and that will just continue for NEO and XBEV. But let's do it in a little organized way. First, the stocks that are in the portfolio that we bought last week and had from previous, and then we will look and talk about possible trading candidates for the week ahead of us. Sumerica moved some last week, not much, but up from 22 to 24 cents. Is the stock we bought in week 34 at 26 cents, and I said this is one stock I will not hold a stop loss onto, because when it moves, it will move very fast, and it will be hard to come in. I have played Sumerica many times at strong profits, and ending the week at 24 cents, it still sits at a loss of some 9+%. So Sumerica is still in a loss. I think it's this week they will come with quarter results, and hopefully it will be. But for 11 weeks we've been waiting for Sumerica. Boring game, but it is a penny stock game. The one thing I'm sure about Sumerica, when it finally starts to move, it probably will be too late to get in, because it will just take these huge jumps. Last few times we have made, have to go back, but I believe it was 34% I see one time we made in Sumerica, 26% another time, so we usually done good. We were up at 70% profit early on when it was really very volatile. I think Sumerica will come. It's still in the portfolio. Should you buy it? Should you not buy it? It's a high risk. It's a penny stock. You should only play with money you are able to lose. But if you check their financials, they have quite strong liquidity. The question has been the revenues, and will the quarter results finally show that their last few purchases are contributing to higher revenue? I think so, and I think Sumerica will wake up. So far, 11 weeks in the waiting. We will see. It's for sure not the best trading tips, but we will see if we can knock out a few dollars of this one. And we had Chevron open from week 43. In week 43 we bought Chevron at $172, and it's not been falling enough to be triggered by stop loss. It's still there, and it's still doing quite okay. Did not do as good as Nasdaq in general last week, because it went up from 183 to 186.36. So only $3 up for Chevron, but that leaves us at almost 9% profit so far in Chevron. Stays in the portfolio because it is not sold. And last week I got into 3 stocks: XBEV, Meta and MULN. And as I just said, XBEV bought 792, went up then down, sold at 815 because I run a stop loss, and I just saw XBEV going higher. I think the end of the week at 869, 870 or something, so it's much more up than that. And I think XBEV will just continue. It will be volatile, but I just think it will continue upwards. But it's one of these scary stocks which moves so much during a day that you can almost get headache. If you're able to trade it, super. But if you're not that experienced, it's a hard ball game. Then I bought Meta, and I give very huge argument why Meta. We bought Meta the week before, it at 94.50. it was moving up, then starting to fall down. It went down to 89, I think it was, cut a stop loss at 92, giving a loss of almost 2% last also in week 44. But again, I said I will try the method again, because everything, they just have to push some news about cost reduction, and of course they did. They laid off people, and investors really loved it. I got into Meta again at 94.50. It was still not the best buy, because it was a little lower, and it just continued upward, sitting at $113 as we speak, up 19.6%. No matter what happens in Meta, I will be at a very nice profit for sure. And you may ask, so do I think Meta will continue upwards? I think if you look at the charts, everything indicates that it should take that gap, which was all the way up to $120, $130. So somewhere between there, I think, will be the end of this short-term rally for Meta before it stops. In the long run, it can go longer, but as I said, in the very long run, I'm not sure Meta is the stock you want to be in. But that short-term pick was very obvious. Meta is still not sold, sitting at $113 right now, up 19.6% in the portfolio. And it will be cut by stop loss when that time comes. Will it be this week? Very, very likely. For me, will it be profit? Should you buy it? Well, as I said, I think there is a trading room upwards to $120, $130. I think current price is good. It's not bad. It will not be the best tips you have to get into Meta, but I think there can be some percentages made. Then there was MULN, another very high risk stocks, but as I argued, there was a plenty potential for upside, so going a little hard on stocks, being in 5 stocks. Got MULN at 22 cents and it moved very nicely, was up at 33 cents I think, then started to fall, was cut by stop loss, gave me 14.82%, so almost 15% in MULN. Do I think MULN will continue upwards? Yes, I do. I think MULN will continue upwards. Will I try to trade MULN myself? I probably will, but it will not be trading tips for a week, because here comes the big surprise. If you just listen to what I said, I thought it would be I think it will be a very volatile week ahead of us. I think things right now are overbought with potential for a natural correction down. That means that I do not want to overinvest. I will stick to 3 stocks, and I have 3 open. I have Submedica, I have Chevron, I have Meta. I think these stocks represent the market very well, so I will only stay in these 3 stocks this week. You might be saying, well, it's the first time I listened to your podcast and I was coming to get some trading tips, and now you don't have any trading tips. Well, if you are a very, very eager trader and you love risk, you can check out XELA, because XELA might do very well this week. And XPEV, I think there is plenty upside in XPEV, and I think MULN will do good. These are 3 high risk stocks that can give you huge greens. At the same time, it can give you some headaches, so it's totally up to you. It's a hard ball to play. Even Microsoft, Apple, all of these are quite low. So given the right circumstances, they might just do very good if we manage to keep up the momentum. But as I said, I think there is a certain amount of risk for the week ahead of us. I don't want to overdo it. Usually I only have 3 stocks in the portfolio. I had that for a very long time, even just 2, because everything was saying that the market should go down, and I didn't want to overexpose myself. So I'll stick to that strategy. We are down to 3, and I will evaluate the market every week to see what I will do. And you may think, so he only has 3 stocks. No, I have much more than 3 stocks. I have different portfolios, but this is the trading portfolio that we follow in this stock podcast series. My oil portfolio is the one doing the very best, so that is said. It's been a runner since day number 1. We are at the end. Again, This time the podcast became some 30 minutes, a little bit less than previous, which is good because there was not too much to talk about this week. It was for you. Now you tune into this podcast, you listen to me, you get some trading ideas, and I hope that you really expand your view, your knowledge, dig into a few articles, read up a little bit. I just told you relative strength index is super easy to use, and it's such a good tool because most of you will do the same mistake over and over and over and over again. You see a stock move. Let's say that I'm very right that Zomedica will go hard this week, so you jump on the Zomedica train just to see your profit you follow a little up and then it comes crashing down on you, because that's how penny stocks work. Most people, they jump on a train which have left the station a long time ago. Very few are able to catch the train as it leaves the station. The game is to be in before it leaves the station and rather wait a little bit. But that impatience, I talked about it when it was about the disclaimer. I mentioned that it's a bad thing in trading, being impatient. You have to have a certain strategy in the things you do. So read up a little bit and learn a little bit more about the company you invest into. After some years, after some trading, you will see the same thing that I see and say. Fundamentals, the stock may rake in money, the company may and the stock price may still fall down because the fundamentals and the stock price doesn't follow each other all the time. That is why we use technical analysis, because it's just natural moves. Sometimes stocks are undervalued in terms of PE, in terms of price to book, whatever kind of fundamental measure you do. But relative strength index, such an easy tool to use, and if things are way overbought, they most likely will have a correction down. Happens all the time. Sometimes we do something called RSI rallies with peak stocks that are up at 70 because they go into this frantic rally, but that is really hardcore trading where you go into stocks that have tons of momentum, they are already fired up, and you just play that last game where people make insane bets and stock prices move very fast up. But you have to be in and out in an instant, you have to be on the trigger all the time. Lots and lots of talking in the end here about the relative strength index, but check it up. And if you think you know everything about the relative strength index, well, there is more to know. It's not just oversold and overbought. The relative strength index can be used to much more. Combine it with volume, combine it with the stock price itself, and you have a super duper tool. Now, this week it will get colder and colder here in Vilnius. Hopefully that doesn't apply to the stock market. I have a feeling it will. But that doesn't mean that we cannot make money. I think there will be much money to be made in the markets ahead of us. We just have to play it correctly. And that's the one thing that we try to do. Until next week, I hope you will have a very good week. I hope you will be able to have some successful trading. Get some green on your portfolio. And if you've been into the crypto market, I also have a few in crypto market. It was hammered last week by FTX. Now, shouldn't talk politics and anything, but dig deeper into FTX, and there is totally understandable why it went over, and now it's dragging everything down. And that will be the end note. Do I think this may pose a buying opportunity? Yes, I think this is a unique buying opportunity in crypto. The danger is that the real danger is more companies may go bankrupt and more money may get lost. And you for sure do not want to lose your money. Personally, I go over a few of the biggest exchanges with my crypto, but in general, I think this might just be a huge upturn, but only for risk money, only money you are able to lose. You cannot bet on them because crypto may go up, it may go down. So far it's been crashing downwards. At some point it will turn just like the stock market do. Until next week, have a perfect week, and we will speak. Bye.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.